Hello, everyone. Welcome to another edition of Tip Tuesday. Geoffrey Nance here with you. We're going to continue our discussion that we started last week. We looked at probably one of the most volatile days that I can recall in the market and went through, looked at a minute chart, kind of what did the S&P do from 1 minute to the next, et cetera. And we kind of went through that entire day. And what we discovered is it was a wild ride. So since then, we've had a couple of days in the market that are not nearly the same to the extent of the moves from that particular day. But just yesterday, we saw the market move quite a bit from up to down, and the range is pretty substantial right now. So we're still seeing a lot of volatility. So today, I thought it might be a good idea for us to really talk about day trading. So what is day trading? Is there a benefit to it? Is there a drawback to it? How should I think through it? Is it for me? And just really kind of laying out some of the pros and cons of what day trading is so that everybody understands how it works, and then they can decide for themselves whether or not it's something that they would like to add or consider as part of their trading experience. So first off, a day trade is a trade in which you open and A&D close the position in the same calendar day. So that's the important component there, right? So there has to be an opening or closing, or both, right? But you could sell to open, buy to open. Point is that you had an open position and then you close that position. And the key element here is that you actually did it in the same calendar day, meaning if I got in, let's say Central Time, the market goes from basically 8:30 a.m. Central to 3 p.m. Central. Those are our trading hours here, Central Time Zone. So if I got in at like 2:45, 15 minutes before the market closed yesterday, and the market opens at 8:30 this morning, and I got out at like 8:35, then I would have only been in that trade during live trading for like 20 minutes. So 15 minutes yesterday, 5 minutes today. And that is not a day trade, not a day trade. So why is that not a day trade? It was only 20 minutes. How in the world can it not be a day trade? Well, it was not the same calendar day. So I entered yesterday. I closed it out this morning. It's not a day trade. On the other hand, if I had gotten in this morning, 8:35, 5 minutes after the market opened, and then about 5 minutes before it closed, I decided to close that trade out. So now I would have been in that trade essentially, almost the entire time the market was open, and that would be considered a day trade. So I'd actually be in the trade longer as far as actual open market time, and yet that would be a longer time period, and yet it would be a day trade, whereas the one I was in for a shorter time would not be a day trade. Why is that? It's all about same calendar day. So if you enter a position today and you get out of that position today, that is considered a day trade. Now, in and of itself, a day trade is not a good, it's not bad, it's just a thing, right? It's a day trade. It just simply says you entered a trade, you exited the same trade in the same calendar day. It's a day trade. So what are the pros and cons? Well, one, obviously you're going to be looking for quick movement. So buy points are very pivotal. You also need to have the stock or the market move in your desired direction, because essentially your plan is to get out that day. Now, there are some people that are going to be trading on a much greater scale, and they're going to be getting out every, few minutes, every half hour, every hour, depending on pivots. Because what happens with a chart on a daily chart can also be useful on a minute chart. So some people will use that minute chart, but treat it much like we will a daily chart, and then they'll make decisions off of moving averages, but not necessarily off of the 5-day, 10-day, et cetera, but it'll be off the 5-minute, 10-minute, 20-minute, et cetera. So they're going to make their trading decisions that way. Is there a downside to it? Well, maybe a couple. One is you have to be able to read that stuff. You're probably going to be a little bit more prone to need to be at your computer. Could you automate those trades? Sure, you can, and some people do for sure. But for us, right, the average individual, if you're going to try to be a day trader, you're going to be sitting in front of your computer. You're going to be watching this stock move. You're going to be watching that minute chart. You're going to be looking at EMAs. You're going to be trying to look at patterns, and you're going to be making decisions. So again, you need movement. It needs to move quickly. But that in of itself is true about kind of every trade that we make, right? So just the idea of day trading is exaggerated because now, again, the thought is that we're going to make this trade within one day. Is there a downside? Well, we can be termed a pattern day trader. So I want to spend a few minutes here talking a little bit about that phrase. What is a pattern day trader? Technically, FINRA defines a pattern day trader as someone who makes 4 day trades in a 5-day period. Okay, so 4 or more day trades in a 5-day period. So let's just say we started this on Monday. So I made a day trade on Monday. I made another day trade on Tuesday. Market's real volatile. I made another one on Wednesday. And then I was in on Thursday and I made another one. Well, that's 4. That's 4 in a 5-day period. So now they're going to require that I have some issues here, right? I'm now termed a pattern day trader. And what that means is it affects the way that you kind of would be able to have your account set up. So they may require that you have margin on that account. And if it was a margin account, then they may, right? They may say, well, you can no longer have a margin account. Now you could go to a cash account and that would be fine. But in a margin account, they could close that account up or say, you have to bring your account up to this amount of dollars. Now that would vary from one firm to the next. But a lot of people are going to require $25,000 cash in your account. So if you want to keep that account active, and you want to be considered a pattern day trader, then you're going to need to have a minimum of 25,000 cash in your account. So for that reason, a lot of our students are going to try to avoid becoming a pattern day trader because they don't want to fall within those confines and to have issues with that. All right, so there are ways to do that, right? So one, if you want a day trade, that's fine. If you're concerned about the being termed as a pattern day trader and how that might impact your account, there are a couple of ways that you can obviously avoid this. One, which is, obviously the easiest, is just simply don't make that many day trades. Okay, so you can just go in there and say, hey, I'm going to make a day trade in this account and go ahead and kind of mark it so that and then maybe if you're planning on being in a trade, and maybe you're not planning on it being a short-term trade, but you get in a trade and it's obviously not working, you say, well, I want to stop out of this. Well, don't stay in a trade and lose more money simply because you don't want it to be a day trade. If you need to exit that trade because it's simply not working, go ahead and get out. Okay, go ahead and get out of that trade. Now that's 2. That means you have 1 left. Okay, you have 1 left. So either trade from a different account or enter your trades towards the end of that day so that there's really no way that you would have a pattern day trade because you get in at the end of the day. Obviously, you can't close, or you're not going to close it that day, that, a few minutes later. So then if you ended up having to stop out the next day, you would be avoiding the day trading rule. So there are several ways around it. Now, some people, like I said, would set up an account. It would be a cash account. It'd be specifically for day trading because they don't mind it. But they're going to have a strict cash account here, which they would use for that purpose. And that may be something that you wanted to consider. Again, most of our students really aren't going to do that. But again, that's something to do. So remember that you can have multiple accounts. So let's just say I traded and I did have a day trade. And then I realized, okay, I got another trade. I had to stop out. Well, now that's 2. I know I've got 1 left, but maybe since I know I'm kind of on the verge here, just switch out of that account. Stop using that account for the week. Flip over to your other account. And again, now you're midway through the week anyway. So it's less likely that you would even get close to being termed as that pattern day trader because you have multiple accounts set up there. So couple of ways around it. You might be inclined to think, hey, with all this kind of volatility, would it make sense for me to make more trades? Because, the market goes down, but then it kind of shoots up, and then I don't really know where it's going the next day. Well, you can certainly take advantage of those moves, and many people do. But what you have to be aware of is, hey, I don't know that I want that to be my primary way of making a living or doing this full time, particularly for those that would have another job, right? So obviously, sitting there watching your computer screen all day, focused on a minute chart and what your stock is doing is maybe not the best use of your time uh, from your boss's perspective. So probably should avoid that. But it doesn't mean that you can't make a day trade here and there, or it doesn't mean that you probably shouldn't make a day trade here and there. I just want you guys to be aware of this. And then tomorrow or next week, what we're going to do is we're going to talk about what does kind of Tradeway present. So we kind of looked at the minute chart last week. We looked at day trading this week. What is Tradeway's philosophy on a general idea of how should I trade? What am I looking for? What's a general idea of, if the trade worked, how long might I be in a trade? What would it look like? What are the things I'd be looking for? So that's what we're going to talk about next week. And then the following week, we're going to talk about long-term investing. So what are the benefits? What are the pros and cons of that? And that's how we'll close up this month's worth of Tip Tuesday. So guys, thanks for being with us for today's lesson on day trading. What is it? How does it work? What are some of the pros and cons? And if you have any more questions about that, let us know, and we'd be glad to interact with you guys. Appreciate you being with us, and we'll see you next time.